Hi, Richard. I'm glad you were able to connect. I'm actually going to stop your video and we will prompt you when it's time for your panel. Would you mind saying something real fast just so we can check your sound?
Yep, it's nice to hear your voice this morning. Thank you very much.
Awesome. Thank you.
Might begin?
Yes, you're good to start, Joe.
Ready? Okay. Good morning. I'm Joe Smith, a senior fellow at the Duke Law School of Global Financial Markets Center. On behalf of my colleagues at the center, including Executive Director Lee Reiners, who's with us today, welcome to the first meeting of the Duke Eviction Prevention Working Group. The working group has been formed to develop bipartisan policy responses to what we fear is going to be an eviction tsunami when stimulus support to small businesses and low-income workers and state moratoria and federal moratoria on evictions and foreclosures expire. The working group is a joint effort of the Center and the North Carolina Leadership Forum, whose executive director, Debbie Goldstein, is also with us today and will facilitate a discussion of policy options later in our meeting. I'm pleased now to introduce Leslie Winner, co-chair of the forum, for opening remarks on its behalf. Leslie.
Good morning. I'm Leslie Winner, and I'm here today as the co-chair of the North Carolina Leadership Forum. NCLF is a program of Duke University that I co-chair along with John Hood, the president of the John William Pope Foundation. The goal of the North Carolina Leadership Forum is to enable North Carolina's policy leaders across political and ideological spectrum, across sectors, race, geography, and gender, to build the will, the skills, and the relationships that they need to engage with each other constructively to make good public policy for North Carolina. NCLF was delighted when we learned that the Global Financial Markets Center intended to bring together a group of leaders of varying ideologies and perspectives to discuss how to address North Carolina's and our country's impending eviction disaster. This kind of discussion among people who disagree with each other because of their different ideologies and experiences is just the kind of dialogue that North Carolina and our country need more of if we're going to end up with policies that serve us well. I predict that you will not agree with everything that you hear today, but this will be a good opportunity to practice active listening. So I'm asking you today to listen to all the speakers with curiosity, trying to hear why they have the opinions that they have. Listen to understand their views, not to think about how to rebut them. And even though you are joining electronically, try not to be distracted. To the extent possible, don't check your email, browse the web, or think about what you need to do this afternoon. Just focus on being here and what these speakers and panelists are saying. This impending eviction crisis needs our serious attention. Because of COVID, millions of US households risk being evicted early in 2021 because they are behind in their rent with no prospect of catching up without help. As a volunteer lawyer for Pisgah Legal Services, every week I talk with people, families with children and single people, white people and people of color, urban apartment dwellers and rural mobile home dwellers who are in danger of losing their homes because their jobs were eliminated or their hours were cut back, or they or their spouse got COVID, or they were repeatedly exposed to COVID at work but did not get paid for the time they were required to quarantine. Similarly, many landlords are in serious financial trouble because they can't afford to own and maintain housing without the income that it produces. This is a problem that is ripe for good minds to come together across their differences to propose solutions. I have just a bit of housekeeping before we start. This webinar will be recorded. You will not be able to unmute yourself or start your video. The attendee list will not be public on your screen. If you have questions or comments, please use the Q&A function located at the bottom of your screen and not the chat function. Please feel free to send your questions in as they occur to you. Our speakers and our panelists will do their best to get to as many questions and address them as we are able. If you have a question addressed to a specific speaker, it would help us if you would put that speaker's name in your question. And we will be saving all the questions and comments for reference by the working group after the seminar is over. We really appreciate your being here. And now I'm going to turn it back to Joe.
Thank you, Leslie. Thank you very much. Our first presentation will be a review of the problem that is facing us by Laurie Goodman, founder and co-director of the Housing Policy Center of the Urban Institute in Washington, D.C. We have set aside a few minutes for questions for Laurie after her presentation. So, as Leslie was saying, please use the Zoom questions function to submit any questions you might have. Laurie, it's great to have you, and the floor is yours.
Well, thank you very much for having me here today. I'm going to share my screen. Hopefully you can see this. I'm here to set the stage today on an overview of the eviction issues. Can you guys see my screen? Can you see my screen?
Yes.
Great. Okay. So here's a summary of my talk. Many renters were rent burdened before the crisis, and COVID-19 has hit renters much harder than homeowners. Eviction moratoriums are not the solution. The overwhelming majority of renters have continued paying their rent during the pandemic. However, the federal aid is running out quickly. Renters in smaller units, renters of color, and lower income renters are facing greater difficulties in making rental payments. Landlords, particularly small landlords, are also struggling. Many are tightening their screening criteria for new tenants. The cost of providing rental assistance depends on what issue we're trying to address. Are we just trying to address COVID-19 affected, or are we trying to address deeper housing market issues because a lot of renters were rent burdened before the crisis? Similarly, the amount of back rent that is due is based on who we're counting. Are we looking at COVID-19 only, or the consequences of COVID-19 only, or all renters that are struggling to pay their rent? I want to make the case first that the COVID-19 has disproportionately hurt renters. It's important to realize that under normal circumstances, the unemployment rate for renters is much higher than for homeowners. For renters, for homeowners, it's about 80% of the national average unemployment rate. For renters, it's about 135%. 80% for homeowners, 135% for renters. When you look at COVID-19, it's disproportionately hurt renters. 38% of renters are in the 5 most vulnerable industries versus about 30% of homeowners. The median income for homeowners is $78,000 overall, $93,000 for those with a mortgage, and $55,000 for those without. The median income for renters, $41,000. Median wealth for homeowners, $255,000. Median wealth for renters, $6,300. Nonetheless, we've done a lot more for homeowners by allowing forbearance with the payments moved to the end of the life of the mortgage than we've done for renters. And it's important to realize that many renters were already facing financial challenges prior to the pandemic. About 21 million renters were already cost burdened. That is, close to half of all renters were already cost burdened going into the crisis. Only 1 out of every 5 renters that's eligible for Section 8 vouchers is actually receiving them. And as you can see, housing assistance as a share of non-discretionary, non-defense discretionary spending is down considerably from where it was sort of pre-financial crisis. So we were already facing a housing crisis in this country for renters, which has been aggravated by COVID-19. We've done very little for renters. There is now a eviction moratorium in place through the end of the year. It's from the Center for Disease Control. There are some carve-outs, but renters can still be evicted for being a nuisance. You can file before the end of the year, but there is an eviction moratorium till January 1st of 2021. Most renters don't know that there is an eviction moratorium. And more importantly, an eviction moratorium is not the answer. The minute the eviction moratorium wears off, any back rent is due immediately, and renters don't have the capacity to pay it in most cases. Meanwhile, the eviction moratorium strains the landlords, many of whom are themselves fairly small players. When you look at what's happened so far, the rental market has held up surprisingly well. This is National Multifamily Housing Council numbers, which primarily tracks 50+ units. You can see through the end of October, the percent of units where the rent was paid by the end of the month was about 94.8, down approximately 2%, down approximately 2% from a year earlier. That is, if you look at October of 2019 versus October of 2020, it was down 1.8%. A relatively similar picture for renters living in single family and small multifamily units owned by individual landlords. Again, you can see Powel, which is a service that provides a vendor that provides services for small do-it-yourself mom and pop landlords, collects data. They collect on their rental collections. They collect rent for about 50,000 on about 50,000 units. You can see from January to October, again down about 2%, from 89.5% to 87.4%. In addition, another 2% or so of renters are on a partial rent payment plan. Even so, these numbers are very, very encouraging. We'll talk more about what happens down the line. It's important to realize that single family and large multifamily rentals account for 70% of the rental units. This just sort of shows you the distribution of rental units. You can see 36% are single family, 13.1% are 2 to 4, 2.1% are 5 to 9, 7.7% 10 to 24, basically 6% 25 to 49, and 34% are 50+ units. So just the distribution of rental units. Those that are the most rent challenged are actually that are the least affluent are actually in these categories. The 2 to 4, 5 to 9, and 10 to 24, especially the 2 to 4s. This just shows you median household income. You can see it's actually highest for those in single family housing and lower in 2 units and higher. Percent below 80 AMI, highest for those in 2 to 4 units. Gross rent lowest in the 2 to 9 unit space. in vulnerable industries, again, highest in 2 to 9 unit space, especially in the 2 to 4s. When you look at who has the most Black and Hispanic tenants, for Black tenants, again, it's the smaller multifamily units, the 2 to 19, and for Hispanics, a relatively similar picture. So renters in 2 to 4 unit structures and other small multifamily have relatively lower income, pay a lower rent, are most vulnerable, are more likely to be Black or Hispanic, and are in industries more vulnerable to COVID-19. Now, when you're looking at sort of numbers in terms of how much back rent is due, what is the scope of the eviction problem, there is a huge difference between data sets. And that makes actually a huge difference in the estimate. Everybody relies very heavily on Census Pulse for many of these estimates, which basically says, are you currently caught up on your rental payment? There's an Understanding America survey out of the University of Southern California that says, in the past month, did you miss or delay payment on your rent? You can see these numbers are very, very different. In particular, Census Pulse has much higher numbers in terms of those that are rent challenged versus the Understanding America survey. Overall, 15% from Census Pulse versus 10% from the Understanding America survey. And again, sort of differences across income and ethnicity. In all cases, Census Pulse numbers are higher than the Understanding America survey, and the latter is actually sort of more representative of the population as a whole. That is, the response rate is much, much higher. One of the issues with Census Pulse is the response rate is very low. So I just wanted to point out that there are some data issues which will which when we talk about the estimates will definitely come into play. While people have done a very good job of making their payments so far, the end of the year is going to present quite a challenge. So the CARES Act was a one-time stimulus of $1,200. It's come and gone. Congress allocated an extra $600 a week in unemployment insurance. This expired at the end of July. An extra $300 in unemployment benefits were added for a 6-week period beginning retroactively on August 1st. And then critically, Congress extended unemployment benefits from 26 weeks to 39 weeks. This expires on December 31st, 2020. So at the end of the year, those that are on extended unemployment benefits are going to find those benefits run out. So while payments have been made pretty well so far, this problem is going to grow dramatically over time. Renters were asked, well, where are you getting the money? If you're having trouble paying your rent, where are you getting the money? And you can see that 36% are borrowing cash from friends or family. 28% are using government aid or assistance, and smaller numbers for everything else, finding new employment or sources of income, 23%, deferment or rent payment plan, 19%. People are relying on many additional sources. It's important to realize that these sources of income, borrowing cash from family or friends, runs out at some point, as does government aid and assistance. So again, the problems have been relatively small so far, but are going to grow as time goes on and as federal aid for extended unemployment benefits runs out at the end of the year. We worked with Avail to ask questions of their small landlords, and about 35% didn't receive full rent in September. 38% did not expect to receive full rent in October when we did the survey. And the biggest reason for that was that the tenant didn't or can't pay in full. Some had vacant units as well. And another 13% offer tenants a discount. Again, this may not be totally representative, but you can see that a lot of over 20% of the landlords who responded to this survey said that the tenant didn't or can't pay in full. It's important to realize that landlords who have lower income and those that have mortgages are more likely to face increased pressure to sell their properties. Overall, 31% of landlords felt more pressure to sell their properties. Only 16% that collected rent in full, 57% that didn't. And obviously the problems were concentrated on landlords that were lower income and landlords with a mortgage, particularly lower income landlords with a mortgage. We also asked the question, are you imposing stricter screening criteria since the start of the pandemic? And you can see that about 36% of landlords are applying stricter screening criteria. 42% of Black and Hispanic landlords, 35% of white landlords. All landlords or the landlords that are applying stricter screening criteria are requiring higher credit scores in many cases. They're also requiring that the income to rental payment ratio be lower. With Black and Hispanic landlords, they're looking more closely at the previous eviction history. Some white landlords are as well, but this is actually disproportionately Black and Hispanic landlords are looking more closely at previous non-payment and eviction history. We suspect that this is because the Black and Hispanic landlords are concentrated in those units where the renters are also lower income and it's more apt to be a problem. Now we move on to the estimates part of this discussion. And this is where things get very, very squishy. So that when you estimate the cost of rental assistance, the question is, what are you estimating? Are you estimating only households with some job loss or reduction in hours caused by COVID-19? Or are you looking at all households who face financial difficulties? So we've got some estimates at the bottom, and you can also see, when you look at income, that the share of households that is affected by job loss is actually not the lowest income households, because a lot of those simply don't have wage income. It's more the sort of 50 to 150% of AMI are actually, or 50 to 150% of AMI are those that are affected with job loss in a higher percentage. So if you look at the cost of providing rental assistance, and what we looked here is, what is the cost of bringing borrowers who are now above a 30% rent burden back to a 30% rent burden? So, and this is monthly estimates. So for the 5.3 million households that are COVID-19 affected, the cost per month with state unemployment benefits would be 2.1 billion per month. With no aid, it would be 3.2 billion per month. For the 44 million renters with state unemployment benefits continuing, it would be about 13 billion a month. With no aid, it would be about 14 billion per month. So, again, the question is, are you looking, when you're talking about rental assistance, only those COVID-19 affected, or are you looking at renters, including those that were cost burdened before? Similarly with the question, how much back rent is due? I want to compare two estimates. The Philadelphia Federal Reserve did an estimate of about 7.2 billion. Moody's Analytics did an estimate of close to 70 billion. The amount per household was very similar. The difference is that the Philadelphia Federal Reserve looked at households who have experienced job loss between March and August, and then looked at the percentage of those that will owe back rent by December of 2020. Moody's Analytics considered all rental households that will owe back rent. So again, the difference is a factor of 10 here. And I've got some estimates on the various methodologies that are used. And then there's an estimate in the middle that relies very heavily on census pulse data. But you can see there's a wide variety of estimates depending on exactly what data sources are used, who you consider, and how you do the calculation. And similarly, how many people face eviction? The historical eviction rate is about 2.3% or 1 million people per year. The source of that is the Eviction Lab. But it's very difficult to predict how many people are going to face eviction, as it involves predicting tenant delinquency and landlord behavior. Some landlords will file an attempt to compel a tenant to pay. Others will work with the tenant during this emergency. Stout, Rezius, and Ross estimated that 7 million to 14.2 million households are at risk of eviction, defined or having no or slight confidence in their ability to pay rent. And they also included 14% with moderate confidence in their ability to pay rent using the Census Pulse survey. And you can see that their estimates of back rent owed were sort of in the middle between the Philadelphia Federal Reserve, which considered COVID-19 affected only, and Moody's Analytics. 5 million households are vulnerable as of January, up to 2.4 to 5 million households are vulnerable on as of January 1st, 2021, with the lifting of the CDC moratorium. 2.4 to 5 million, they considered those that were 3 months or more back due on rent. Aspen Institute, using Census Pulse, says 12.6 million households are at risk of eviction. Again, based on the question, how much confidence do you have on your ability to pay rent? The National Low Income Housing Coalition estimates 6.7 million households are at risk of eviction. They considered 64% of those with no confidence in their ability to pay rent, and 29% with slight confidence will miss their rent. So huge differences in terms of how many people facing eviction, but even under the most conservative numbers, it's a multiple of what has historically been the case. With that, let me stop and share my screen and take any questions.
Thank you, Laurie, very much. For those viewing, you have now seen the text regarding our problem. We have a question from Allison Rice, hope I got that right, which asked whether there are particular types of the units, rental units you discussed, say 2 to 4 units, for example, are concentrated in various parts of the country, urban versus rural. In other words, do we know whether the two, in your breakdown of size of rental units, is there an urban rural split that's not that we know about?
So yes, so the 2 to 4 units tend to be disproportionately located in older cities.
Cities. Okay. Okay.
And it's basically, yes, and it's basically center cities more likely than suburban areas or rural areas.
Got it. Okay, Allison, I hope that answers your question. Laurie's slides will be shared by us. We'll find a place and tell all of you who are on the broadcast and others. She's been kind enough to do that. Thank you.
Yeah, no, you can share my slides anytime you want there. I didn't notice any glaring typos as I was going through them, which I normally do.
Okay. I don't have, well, I had others. I think you answered other questions that have been submitted previously, which is the comparison of COVID-19 related evictions versus all evictions. In other words, all people affected. We've been through that. The stricter standards by landlords, I think you've also touched on. So it's the small landlords are raising the sort of credit to the extent they can do it, the credit.
We don't actually,
profile.
so we worked with Avail, so we had them insert that question because we were actually having a discussion as to whether landlords were relaxing standards because they were concerned about vacancy, or tightening standards because they were concerned about non-payment of rent. So we actually had them ask that question. We don't know whether larger landlords are also tightening their standards because nobody has done a survey asking that question. I suspect they are.
Got it. I don't have other questions right now. Once, twice. Okay, Laurie, thank you very much. We'll move on to our next presentation. Our next speaker will be Jessie Mccoy, Senior Lecturing Fellow and Supervising Attorney of the Civil Justice Clinic at Duke Law School. In those capacities, Jessie has been a moving force behind the establishment of a very successful and widely noted, I might say, eviction diversion program. He's well positioned to give us a frontline view of the eviction crisis and has agreed to do so. So Jessie, welcome and take it away.
Thank you for having me. I want to start off by reiterating the fact that what Ms. Goodman presented was that evictions were already a local and national crisis long before the onset of COVID-19. So if anything, COVID-19 has actually exacerbated the main reasons why most of the clients that our clinic represents are experiencing evictions. Most evictions that are filed are based around non-payment of rent. And any given day in any American courtroom dealing with landlord-tenant law, what you'll hear are the same repetitive reasons for non-payment. Those reasons generally revolve around a loss of a job, an unexpected medical illness and related medical bills, or loss of transportation. For those first two particularly, COVID-19 has a direct effect. So for people who lost their job or experienced substantial reductions in their work hours, these have been the result largely of government shutdowns, private business shutdowns, and personal COVID exposure, and have inhibited the ability of those tenants to work. Further exposure to COVID positive individuals requires a 14-day quarantine period. So if you are salaried, it may not make a big deal. But if you are an hourly wage worker, missing 14 days means that you are missing on a complete paycheck. And not only are you at risk of missing that complete paycheck, but you also are risking whether or not you will have employment to return to. There are a lot of industries, particularly service industries, that can't afford to have employees that are going to be out for 2 weeks. So the threat of job loss is very real, and the threat of hour cutbacks are very real as well. Secondarily, when we look at the rationale of unexpected medical illnesses and related medical bills, well, COVID-related symptoms or a diagnosis of COVID generates unanticipated doctor visits and treatments, and those generate medical bills. So for people who are already cash-strapped or living in households that are already cash-strapped, this takes a bad situation and elevates it to a catastrophe. As such, without government intervention, tenants were subject to being evicted due to issues that they largely did not personally control and did not personally choose. The type of government intervention that was implemented was a series of moratoria that ran essentially from March until now. The first that we saw was the CARES Act. And the CARES Act included a provision that provided a moratorium preventing renters who received federal subsidies or renters who were living in properties that were supported with federally backed mortgages from being evicted from March through roughly July 25th. Even if the landlord wanted to evict after July 25th, they had to provide a 30-day notice, and that would actually set the earliest date that eviction could happen around August the 26th. However, if you were a tenant who did not receive federal subsidies or were not in a unit supported by a federally backed mortgage, you were still subject to an eviction all the way up through the month of August. And what happens is at the end of this period, this phrase is coined of this tsunami of evictions, where all these people who, had not been in a position to pay rent through March and were protected to remain in the unit, all of a sudden they were going to have those rent amounts accelerated and need to pay, and they were going to be evicted. Well, at that point, what happened was there was an executive order that was entered that gave federal agencies the ability to look and assess whether or not any additional relief could be created. And the heads of the Center for Disease Control and the Department of Health and Human Services came together to put together our second moratorium, which is what we know as the CDC moratorium. And the CDC moratorium was the first national action taken to halt all evictions for eligible tenants, including those renting in private leases. So as long as you made less than $99,000 a year as a single person or $198,000 a year as a married couple, and you made the best efforts to apply for government assistance and to continue making partial payments to the landlord to the best of your ability. And if you were to be relocated, if you face an eviction, you had the ability to sign what's called a declaration form. And that declaration form, once provided to your landlord, prevented you from being removed from the property until December 31st of 2020. Now, despite the fact that this was federally enacted, there were a million different ways that this was interpreted. And of course, as you can imagine, those ways presented their own challenges. So how would this be interpreted in your respective state? Is this a power that the federal government even has to essentially get involved in private landlord-tenant contracts? So the questions were abound. On top of that, aside from the federal intervention, the states were largely left to their own devices in crafting their own respective COVID-19 responses, particularly those related to eviction. And what you see is this produced essentially 50 different methods for trying to dictate how the process was going to work in each one of those states. And we've also seen that some states were under severe and very restrictive shutdown policies, whereas other states, everybody was still continuing to gather and do normal life as usual. So because the focus of these moratoria wasn't necessarily on housing itself and preserving people's ability to stay, but was more so focused around the concept of preventing the spread of COVID, then there was no effort made really to put together rent supplementation packages. And the result of that is continued accumulation of rent deficits. The moratoriums, in fact, do nothing to supplement any of the accumulated rental deficits that continue to stack up every month. Authors do nothing to address the associated costs and fees rolled into that growing deficit. And the result is that now, with more tenants regaining employment, a lot of the tenants are now able to cover the rental amounts moving forward, but they are largely unable to cover the amount that has accumulated as far as the deficit goes. It's important to note that the moratoria were uniquely designed to stop the spread of COVID, not to maintain those viable tenancies. And the government knew that largely untested populations of tenants being evicted during a pandemic would place new prospective communities at risk of contracting COVID. So as you can imagine, if there are people who are largely untested and they are in one area, we've tried to do everything we can to enact policies to encourage people to stay within that area or within that community. However, evictions force people to have to relocate. Some folks are going to be in a position where they have to go into shelter with others. Other folks are going to couch surf and go live with relatives. Some folks are going to look for other prospective landlords and go into a new community. Well, each one of those relocation processes carries with it the threat that someone who may or may not be symptomatic, but may be carrying COVID, can spread that to a new situation wherever their new place is and continue to see the increase in numbers for COVID that the government was concerned about. While the moratorium certainly helps the tenants stay in their homes in the short term, it ultimately postpones the inevitable eviction because it fails to supplement the rent. So as we discussed before, if the rent amounts continue to increase, it doesn't matter if the tenant at this point is on better standing and is able to pay moving forward. The rental amount is still going to be due once the expiration of the CDC moratorium is in place. Therefore, people are going to be making some very, very creative decisions as far as what they do when they get back on their feet. And some of those things are going to present issues for the landlords, particularly small local landlords. What you have to appreciate is that small local landlords have essentially had their properties commandeered by a tacit order of the government and have essentially been forced to provide free housing, in some cases dating all the way back to March. And from a landlord perspective, they would say that's not fair. They've upheld their end of the private lease contract that they've signed with their tenants. And because they've upheld their portion of the bargain, but they are not seeing the rents that they were promised in the lease as well, this has created a significant problem. Typically and historically, the way that that problem was addressed was to institute an eviction action to remove the non-paying tenant and to replace them with someone who is able to carry forward on the rent. However, the moratorium stops them from being able to evict. So what you are seeing from the landlord's perspective is people who are essentially living in a place, not paying rent. And if that landlord has other mortgage considerations or other cost considerations, that landlord is still going to be held responsible to their private mortgager for the things that they need to pay for. So it becomes a sort of collectively a money pit where they need to pay, but they're not receiving the funds that many smaller landlords are relying on in order to sufficiently make those payments. And because they're inhibited from being able to remove people because of the CDC order, then landlords are being harmed in this situation as well. But the truth of the matter is that this shouldn't be viewed as a landlord versus tenant issue. The issues aren't the fault of the tenant and the issues aren't the fault of the landlord. This is actually a complete failure on the part of government to adequately prepare for the full impact of COVID-19. And as a tenant advocate, while I appreciate the moratoriums, I also think both tenants and landlords would benefit from added rent supplementation from the government. In North Carolina, we've seen that state programs that have tried to design concepts for rental assistance have largely been overwhelmed by the compelling degree of demand for that rental assistance. So in conclusion, we're standing here today on the precipice of an expiration of the CDC moratorium coming up in a few short weeks on December 31st, 2020. And unless Congress takes immediate action to extend the protections, there's going to be the eviction tsunami that we all fear. But extension of the moratorium alone does not address the rental deficits or do any favors for the landlord. The best course of action is supplemental rental assistance so tenants don't have a growing, unreachable deficit looming over their heads, and so that landlords can get paid what they are owed. And I believe that with a coalition such as this, we will be able to put our heads together and come up with a solution that will resolve things for everyone without this having to be an adversarial process. Thank you so much. And I will turn it back over to Joe.
Hi, Jessie. Joe got disconnected for just a second. Debbie, are you able to take over at the moment?
Sure.
Awesome. Thank you so much. When he rejoins, I'll let you know. Oh, there he is.
Well, Jessie, we had a couple of questions, so I'll ask those very briefly, and then Joe will step back in. Jessie, can you talk about how smaller landlords might be getting relief from their mortgage holders and what we know about that and what other relief there is for landlords at the moment?
So I work primarily with tenants. I don't work with landlords. And I think landlords, it really depends on what kind of mortgage you have and who you're banking with. There are, particularly over the summer with the CARES Act, what you saw was that the federal government went as far as to say that if you have a federally backed mortgage, they're going to support any efforts for foreclosure, and they're going to prevent you from being able to be foreclosed upon. But everyone isn't in that position. So there were a lot of landlords who also had private mortgages. And what you see, at least for numbers locally here in North Carolina, the private landlords were still evicting during the period of the CARES Act. So what happens is what landlords, mortgage companies are able to do dictates oftentimes whether or not the landlord is going to make that decision to go forward with the eviction. But either way, the tenants ultimately are going to be harmed one way or another, because either you're going to be evicted and removed, or you're going to have this looming deficit continue to accumulate until that becomes due when the CDC moratorium ends.
Thank you, Joe. I'm going to hand it back to you.
Thanks. A higher power removed me. Jessie, thank you very much. As usual, great. We'll now continue our discussion of the crisis from the front lines with a panel of experts from various perspectives. Here again, if we have time for questions, we'd love to have them. So you now know what the question function is, I hope, those of you who are dialing in, and you feel free to use it. Our panel is comprised of the following people. Ashanti Brown is Director of Strategic Management at the Durham Housing Authority. Rick Glazier is Executive Director of the North Carolina Justice Center. Steve Powell is Executive Chairman of Situs AMC, and Sherry Yarborough is President of the Apartment Association of North Carolina, which represents a number of landlord organizations, I believe. So I have some questions that will start us. And again, if there are questions from the audience, please feel free to send them in. Sherry, let's start with you. We've heard from the tenant's point of view from Jessie, although I think he gave you some good words. What, from your perspective and the perspective of your members, is the situation with regard to the COVID situation and the economic downturn? What do you hear from your members about what's happened and where we're heading in 2021?
Hi, Sherry, you're still muted.
Sorry about that. Since the outbreak of COVID-19, the rental industry has been fully aware and expected economic impact, of course. We knew that would be unavoidable. Our primary challenge has been the drastic reduction in rental payments, which greatly reduces the provider's ability to give services to the residents they rely on, such as utilities, trash, recycling, and even just the general maintenance of the building. I think there could be a misperception out there to some that rental housing providers are just a big, large conglomerate. Laurie alluded to this earlier. You know, people perceive us as this large conglomerate that can afford to take a hit in income, when in reality, our numbers show that 65% of providers are small mom pop organizations who consider their real estate to be more of a way to earn a living or a nest egg for retirement. Those who manage the larger apartment communities make up about 35% of the rental market. And even those really do work with a thin financial margin. It may be interesting for some folks to know in this group that out of every dollar collected in rent, 14 cents of that dollar goes toward taxes. 39% goes toward their mortgage payment. 27% goes toward operating the property through staffing and payroll. And 10% would be capital expenditures just to maintain the building and provide the quality housing that the residents expect. But to me, the big thing that hit home when we received this information was that only 9 cents out of every dollar goes into the pockets of the owners and investors. So, and some of those investors are actually public pension funds and 401ks, which we rely on for our retirement. So I thought that may be interesting for folks to hear. Right. But the rental payments allow the property owners to pay the bills, and a drastic drop in collections does not relieve our obligation to pay the mortgage, the taxes, the insurance payments. Right. So continued rental payments are obviously necessary for us to keep our properties adequately staffed. We've seen, with just as with other industries through this pandemic, we've experienced a high number of layoffs and reduction of staff due to reduction in rental collections. We've got to be able to have rent coming in to pay our people. So in addition to that, you know, the housing supply and the affordability crisis that Laurie and Jessie both alluded to earlier is a concern. And with COVID-19, it's only worsening. Continued absorption of rent loss will be devastating to affordability, availability, and stability of the rental housing industry. One thing that's been heavily discussed today is the eviction moratorium. And regarding that, none of us can disagree that the decision to postpone evictions was the right thing to do, as many renters are suffering through no fault of their own. But in many cases, we've had residents who could afford to pay their rent who chose not to because the eviction moratorium was in place. Some who can't pay their rent have built up a balance, in some cases of 6 to 8 months rent. In many cases, that money will never be collected. Residents need immediate rent relief, and funds have been provided by programs like the HOPE program, and other relief agencies have helped, but it's really barely going to touch the surface of what's to come, especially when this moratorium ends. So another eviction related concern is non-rent related evictions, which I believe Laurie noted, or it was noted somewhere on one of the slides. But with the eviction moratorium and closure of the courts, it's made it difficult to remove residents from properties for non-rent related issues, such as criminal activity or domestic situations where a tenant or resident safety is at risk. So, I mean, just as far as what the apartment association or what our members have really worked hard to do is to assist residents, to give them guidance on how to keep them in their homes, whether it be from referring them to rent relief or utility relief agencies, or offering deferment of rent in some cases. Some landlords have offered discounts, waived fees to do what they can to help relieve the resident. But, you know, Jessie, I mean, he hit this on the nail on the head earlier. I mean, it's no one's fault. It's not the resident's fault. It's not the landlord's fault. But housing providers are not able to continue to mitigate the loss of income from these tenants. So that's our biggest challenge is, and it really mirrors what we've heard throughout this meeting. Significant funding is vital in order to be able to help renters and their families across the state avoid eviction, and to help housing providers continue to provide quality housing to hundreds of thousands of renters.
Thanks a lot. That's a big help. There is a question, by the way, in the queue about non-payment related evictions, but we'll come to that if we have time. Isaac, we hear you. Steve, do you have something to add from the renter landlord's point of view, the industry point of view?
Sure, Joe. Thank you very much, and thank you, Sherry and Jessie and Laurie. You know, just to give the audience to frame this up a little bit from where we're coming from at Situs, we're a large commercial mortgage loan servicer, both the multifamily and the commercial space. Over 200 billion in loans, over 100 different lenders that we represent. And just to kind of break that down as it relates to the audience and the subject at hand today, we service about $40 billion worth of multifamily loans, which represent about 3,500 properties, so hundreds of thousands of apartment units. And we also service $4 billion worth of single family residential that's used as a rental property. So that's single owners or single owners that have multiple units, housing units that they may be renting. So when we hear about the tenant side of it, we're looking at it very closely at the landlord side. And one of the questions that was up when Jessie was speaking was, are smaller landlords getting anything from the mortgage holders? I will tell you right now, it's a hope, a kiss, and a promise. You're getting a forbearance in many situations, whether you're a government-backed loan or not. There is a level of empathy and compassion that is being demonstrated by most of the lenders we work with. There isn't a hard line in most situations. So lenders generally, and this is nationwide, have been working with the landlords in this situation, but it just cannot continue. The answer is not to continue the eviction moratorium. The answer is to really develop some type of subsidy or rent guarantee program for the tenant for the benefit of the landlord. Because think about what happens here. Tenant doesn't pay rent, landlord doesn't get income. Okay, that's simple. So now what happens next after that? Well, guess what? It's that time of the year where taxes are due. Landlord can't make tax payments. What happens? City can't pay police officers. We can't pay for city services. It's basically a domino effect of what happens. And so that's great. And we've all kind of bound together. We're working together as Americans to help everybody through this crisis. But at some point, we've got to look at how we're helping people and be as most effective as possible. As you know, I've shared some information with you. I think that one of the things that can be done is to look at a program similar to PPP, distributed through the banks, and ultimately to the benefit of the landlords. That way we keep the whole economy kind of moving. We keep people in houses, we keep the businesses and the employees that support the apartments working, and then we don't create a credit issue. Because remember, what we had was a health issue that became a liquidity issue that we don't want to become a credit issue. So I think there's a lot we can do here, and I'm glad I was able to participate today, and hope I can add more from the mortgage holders' standpoint.
Steve, you get a second chance in a few minutes on, don't get Debbie mad at you for front running the panel, her panel, anyway. Ashanti, let's hear about it from the local housing authority point of view. Where do you and your colleagues see the COVID situation and present and prospective, and do you have the resources you need to address it?
For that question. So for context, the Housing Authority of the City of Durham, we service over 2,500 families with vouchers where they can lease in the private market. And then we have about 1,200 families that lease housing directly from us. And it's about 10,000 individuals who are assisted locally as a result of that federal assistance from the United States Department of Housing and Urban Development. We've put protections in place for our residents for the properties that we actually where we lease to low income, extremely low income or very low income families. But our current challenge is actually getting our residents to come in and talk to us about what their circumstances are, so that way we can tell them the ways that we can assist them. We've implemented some procedures where we actually reach out to folks directly, but it's still a trust barrier there in some instances, and they're relying on the moratoriums in some instances. I echo the sentiments of Ms. Yarborough around the families who are able to pay, who've decided not to as a result of the moratoriums. Our biggest fear at the Housing Authority is that they're gonna see that cliff once the moratorium is over, which is why we've extended it, at least for our Housing Authority residents that are at our lease properties, until June, so that way we can continue to work with them. But the unfortunate thing, where the challenge lies, is that HUD requires us to collect rent. We can't waive it, and it is a revenue source, but the biggest thing is we're insulated to some degree because we also have the federal funding. The challenge is we can't waive rent. In our voucher households, who lease from a lot of the smaller landlords, they aren't protected the same way that our residents that lease directly from us are. And so we're facing the challenge of making sure that those families are protected as well. We don't have the resources. We definitely need to make sure that the information about available resources for rental assistance saturates the market, because my fear is that families don't know about all of the assistance that's available to them. And in addition to that, we need more federal resources for rental assistance, because we know the demand is high, especially with the community that we serve. And then most importantly, that when that assistance is available, that is easy to access.
Got it. Thank you so much, Ashanti. And now, Rick, as both an advocate for low-income people and a very effective legislator in your prior career, what do you see as the biggest challenges going forward for us as collectively to address this crisis?
Thank you very much, Joe. And I'm going to be echoing a number of things other folks have said briefly, but just to put some North Carolina numbers on it, we're looking at potentially 300,000 evictions come January. There are probably another 800,000 total folks who are in utility arrearages in this state. And those kind of numbers, which is why we're having this discussion today, would overwhelm the courts and social service agencies in this state. And so the two things that I think we've all talked about that are really crucial is we need time to work out arrangements to resolve non-payment of rent situations. But we also need the resources to help resolve those situations. One without the other does not get us very far. And courts and sheriffs are also going to have to be part of that coordination of effort as well. And so one of the most important things is intensely and exigently educating legislators about the problem, both from the tenant perspective, but also from the landlord's perspective and for the general public. And that everyone's interests here are, as Sherry and I have done a letter together before, mutually joined and in this crisis. The tenants need a safe place to stay during the pandemic. Landlords need not to lose their businesses or rental properties. Public health is dramatically affected, and particularly as we get into January, by the mutuality of interest here and keeping people from having to live in congregate ways that are unsafe or can cause the spread of the virus. And so the bottom line, I think, is convincing people both in Washington and in Raleigh of the unprecedented crisis that really is going to just move, as you have suggested, into tsunami mode if we don't take emergency action now and very early in January. And I'll finally say, sort of leading into the panel that'll follow, is that the resources are available to do that. At the federal level, there's a bipartisan proposal that's sitting there for at least a good start on a $25 billion worth of rental assistance that would be available for utility issues and rental assistance that bipartisan coalition has worked out that could be put in a CR or could be put into an omnibus end-of-year fiscal bill. And at the state legislative level, there's $4.4 billion of unspent money from last year's non-budget and $1.1 billion in the rainy day reserve. And so there are the options Steve talked about, the options Sherry has talked about, what Ashanti has talked about, and I hope that'll lead to a discussion that'll follow. But inaction is not an option right now.
Okay, thanks very much. I have three questions for people who know more about this issue than I do, so I'll try to form them quickly. We've been graced with another 5 minutes. The first question from Isaac asks really about whether, Sherry, you were discussing about what I would call the non-payment of rent eviction cases. I think the implication of Isaac's question was, have they been used as a way around the CARES Act restrictions, around moratoria? And I guess it's for the whole panel. I'm not putting you, Sherry, on the spot. The question is has this been availed of, how should I say it, outside of the intention of the program? I don't expect your lawyer would tell you, I don't expect you to say they have, but
well, I mean, I can't guarantee every landlord would act the same way. I mean, human nature, people will take advantage and work around the system in some cases, but I can say, I think for the majority of the case, I mean, most landlords are professional and they're not going to jeopardize their reputation or want to increase their liability by acting outside of fair housing laws, but also taking advantage of someone and trying to push them out, kicking someone when they're down.
Okay.
So, I mean, I'm sure other people may have an opinion on that, but I think for the most part, I can tell you from my industry friends that I've spoken to, there are many people sitting there they would love to push out, but they're not going to take that risk, because they can't afford to pay their rent.
Other comments from the panel? Okay. Yep. A second and related question, and Steve has got a proposal we're going to consider that Debbie's going to lead as one of many proposals, several proposals. But Sherry, is there any government aid in particular? We've been asked by Jamie. Is there particular relief landlords would like from the government going forward?
Well, I think Rick has actually alluded to there is a lot of government money there waiting to be spent, and we just want our fair share of that. I think one of the things we've had discussions on, from our members' perspective is that it would be nice if there were a way that some of these government funds could be spent or paid directly to the housing provider. I mean, in many cases, people get relief, but it may not necessarily go to what the intent is, which is to pay their rent. It may go toward other things. So that's one thing that pops up in my mind that, I would like to make sure if we get that relief that it goes where it's supposed to go.
Okay. All right, thanks. Time's up. I'd like to thank Bill Rowe. We'll get your question answered as soon as I understand it, which will be sometime next week. Thank you. Thank you for our panel for sharing your perspectives on the current crisis. Debbie Goldstein will now facilitate a panel of experts who will discuss a range of possible responses to ameliorate this problem. Debbie's the executive director of the North Carolina Leadership Forum at Duke. Prior to joining the forum, Debbie served as executive vice president at the Center for Responsible Lending, where she led policy and advocacy efforts on consumer lending issues, including mortgage policy at the state and federal level. Debbie, over to you.
Thank you so much, Joe, and to all of our speakers today. I'm pleased to welcome our thoughtful group of experts for the next panel to share their thoughts on how we might respond to the crisis and a variety of options. First, we have Abram, chair of the North Carolina Housing Finance Agency Board of Directors and CEO of James River Group. We have Laurie Jones-Gibbs, senior vice president of community development in the Carolinas for PNC Bank. Rick Glazier, executive director of the Justice Center, will join us again. We have Richard Moore, CEO of First Bank Corp, community bank with more than 100 branches in North and South Carolina, and one of our former state treasurers. And Steve Powell from Situs AMC will be joining us as well. Before we begin our discussion, I want to provide a brief overview of the types of proposals that have been put forward and some considerations for how to evaluate their benefits and downsides. And from there, I'll ask each panelist to share their thoughts on possible strategies. You can categorize the responses we've heard about so far in a few ways. The first are the eviction interventions we've heard about, extending the current moratorium via either federal, state, or local action. And there are also a number of other eviction interventions, such as providing tenants with counsel, diversion programs, and mediation programs that have been provided at the local level in some cases. Second, we've heard about direct aid to tenants. And in some cases, people have also talked on direct aid to homeowners. Direct aid, again, has been coming so far from federal and state sources. Some of it has been very specific, such as direct funds to pay rent or funds that are paid directly to landlords for rent. But of course, there are related supports that Laurie, Goodman, and others have mentioned, such as unemployment benefits that can be used to pay for rent, stimulus checks that have been distributed, supports to pay utilities, et cetera. And one note on this is through the previous CARES Act distribution, states used their CARES funds differently in different targeted ways. So for example, some states distributed CARES Act funds for rent just by population size of different localities, where others, for example, Florida and Washington, used formulas based on the reemployment assistance rate or based on the percent of people of color living below the poverty line, and set different eligibility requirements for rent assistance. So there's quite a variety in different states of how aid has been distributed to tenants so far, and that could happen again. As we've talked about, direct aid to multifamily property owners is another option through direct federal or state funding, or as Steve Powell has proposed, and we'll talk about some more, through a modified PPP program that modifies existing loans to property owners to bridge this period. There's also quite a debate about who should distribute these funds, whether it's through HUD, through Treasury, or through the banks directly, and what might be the most efficient approach. And finally, people have touched on already that there are longer term needs and supports for affordable housing that could make a difference. Changing zoning, tax credits, or a trust fund to encourage construction of more affordable housing units could make a difference in the short and long run. And of course, there's a fifth option, which is to not take action at all, but to focus on reopening businesses and COVID directly, and let the market play out. And I think many of our panelists would argue that's what we're doing now, and what we ought to avoid. In terms of trade-offs, people have talked about some of the themes. Each of these programs have different costs and different sources of funds. Some of the programs are more efficient or less efficient. They're all in the context of other COVID assistance that's on the table in various ways. And there are serious questions about how to distribute funds equitably and make sure people in need are receiving support, as well as the landlords that we've talked about, both the small mom and pop landlords as well as larger investors, as well as the longer and short-term effects of these impacts and the property tax revenue implications that Steve Powell touched on earlier. So with all of that in mind, I'm going to turn it over to our terrific panelists. Rick, could you lead us off by talking about which policy responses you think would be most helpful to tenants and where you might fund those resources?
Thank you, Debbie. I'm glad to do so. And I'm sort of in the category that all of the first four really have merit and have to be mutually interdependent and all used. There's not going to be one solution or one box that gets checked here that's going to resolve this, both for the reasons of the immediacy of the COVID issues, but also for the longer term deep rental issues and inequalities that exist and pre-existed COVID. So I want to highlight a couple things. First, I want to highlight the real importance of the diversion and mediation programs as a long-range tool, short and long-range tool to assist in helping tenants stay in their properties, stay in their apartments, and landlords as well to be able to get a rent and a payment plan in place. Durham has one model, Mecklenburg County has another model, and funding for those models really is important, not just in urban settings, but there's obviously rural settings as well that need to experience that and have that option. That gets back to our time and resources in combination. Diversion and mediation is and continuing the CDC model ban for a period of time, all are crucial for creating the time, but they are not useful if there is not resources put in to allow us to have renters catch up on their rent and allow landlords to be able to stay in business. Which gets to the second and third options that Debbie, you talked about. One is the aid to tenants. And here I want to talk about not separating out rent and utilities. That's really important with the numbers that we're looking at and with the COVID circumstances, not to mention issues like creating access to internet and creating access to simply electricity for school purposes, as it appears more and more districts are going to stay remote into January, and I suspect into February and possibly March. And I would also add, we in North Carolina have something we haven't talked about, but all of this is exacerbated because we have, if not the worst, it is pretty close to the worst unemployment system in the country, with very limited duration and very limited benefits, which creates, again, its own problem in creating cash availability for arrearage catch up and for staying current. And that's a whole issue that really winds its way now, and we're seeing the consequences of it in North Carolina. The third, I think there's a lot of merit in Steve's proposal and in the discussion of direct assistance to landlords and helping catch up and having tenants catch up on arrearage through that, but getting the money to the landlord so that it meets both purposes. And finally, there is no gainsaying that prior to COVID, the affordable housing issues were significant throughout this state. Take a look at Asheville, just as an example, and not dealing with some of the systemic issues that exist there is missing an opportunity in this crisis to look beyond the immediacy of the next couple of months. I think all of those things have to be under discussion, and I think they have to be used together in order to really make this work, not only for the next few months, but for the upcoming years.
Thank you so much. Steve, you've proposed an innovative program based on the PPP small business loan program that would go directly to small multifamily property owners. Can you talk a little bit about the proposal and why you think it's a more efficient response?
Sure, happy to. I think that the one thing I want to point out is in my research and looking at the CARES Act and even getting on sites and trying to apply for some rent assistance, assuming I needed it over the last week, I found reasonably educated, I'm a reasonably educated human being, I had a problem applying for that assistance. Not whether I qualified, but just figuring out where to go. So I look at this and I say, we're putting too much burden on a population that one has just been challenged to get the right kind of job, to stay employed, and that is the most affected. And we're trying to reach out to a much broader population of people versus trying to reduce it to the most common denominator. Today, there's approximately $1.7 billion of outstanding multifamily debt in the United States. About 30% of that sits in banks. About 46% of it sits in the GSEs. The rest insurance companies, CMBS, and alike. So when you look at what Laurie presented about, where the bulk of the stress is for tenants not being able to pay rent, it's in the smaller multifamily properties. That's the properties that the debt is owned by the bank. That is sitting in your banks. Yes, the GSEs. Yes, Fannie has some. Yes, Freddie has some. Yes, HUD has some. But the majority of that is sitting in our community and regional banks. These are the people that are the heartbeat of our local communities. We participated, my organization, when PP rolled out, we participated with the top 5 bank in the US in processing the PP loan applications. We also participated in one of the top 10 non-banks, who participated in that program. We saw that in a very short amount of time, and we're talking about over a weekend, they were able to stand up a program, go to business owners that they already had relationships with, which we just figured out the multifamily owners already have a relationship with that bank. And they were able to start processing checks and putting money into those business owners' hands within a week, 2 weeks. And that helped not only the business for a period of time, but it helped the employees of the business. So instead of making every single employee that worked for a restaurant or a hospitality industry or the affected industries apply for something like they did in unemployment if they got let go, it put it on as a collection point to the businesses. I think a program that speaks directly to these multifamily, smaller multifamily, not the institutional owners, the smaller mom and pops, the smaller guy that this is their lifeblood, this is what they do for a living, that speaks directly to them. I think it can be deployed very effectively. I think if you do it right, let's look at what we did in TARP. A lot of people might not like what we did in TARP 10 years ago, but guess what? Most of that money got paid back. I think you could do something for this sector right now that could actually probably get paid back at a much higher percentage, because if we just hand out rental assistance, guess what? That's not going to get paid back. So what is the most effective way? Our idea and our belief is something along the lines of a modified PPP program distributed by the local banks and the national banks that hold the majority of the debt for the smaller multifamily properties that are the most effective.
Thank you so much. Adam, from your perspective, can you talk about the deployment of federal COVID funds we've already seen in North Carolina and your perspective on both the role of North Carolina and the federal government in addressing the pending crisis?
Sure, Debbie, and thanks. It's terrific to be with this group and to be working together on this problem that I know we all care very deeply about. And I've heard many comments that I agree with in terms of how we get out of this crisis. First thing I want to point out is if we face 300,000 potential evictions in North Carolina, which I actually think maybe is slightly a low number in the worst case, and you think there are 3 people per household, that's 900,000 North Carolinians out of a population of 10 million. So that's, just a little bit under 10%, it's 9% roughly of our population. So we are really talking about a lot of our neighbors. There's nobody on this call or anybody in North Carolina who won't see people who have been evicted if we have 300,000 evictions. This is a serious problem. and I know everybody on this phone call knows that we've mentioned that there's a compromise bill on the table in DC with $25 billion for rental assistance. Nothing could be more critical than making sure that the North Carolina delegation supports that bill. I mean, I frankly think that's not enough, but that's what's on the table. And all of us need to get shoulder to shoulder. And when I say all of us, not just the people here, but the people that we're in touch with. And I think particularly effective would be small landlords. Reaching out to our senators and our congressional representatives with letters and phone calls. And I think that all of us who are in touch with small landlords, and it's a difficult group to rally because they're so dispersed but Sherry, I think you have access to some of that, but I think that many of them are mom and pops who are not necessarily members of the apartment association. So I think that we need to find a way to educate and rally small landlords. Now, talk about your question, Debbie, which is how to distribute the money. Look, I think the HOPE program, which was the CARES Act money that came to North Carolina, I think was pretty effectively distributed. It went into, and Steve, this isn't exactly the same as you're proposing, and I want to think more about what you're saying, but that money went into the North Carolina Office of Resilience and Recovery, and then it came to the North Carolina Housing Finance Agency for, we just did administrative work, but it flowed through NCORE, which is the Office of Resilience and Recovery. That's pretty efficient. That administration and process is already set up. It can be handled and all the infrastructure for that is built in advance. And I think that's would be an efficient way to do it. I believe that we're better off paying the money to the landlords. And part of this in my mind is a political consideration. I just think we get into a huge fight if we bring money in and for forward rent, and we don't get all that money paid for rent. And there are millions of good reasons why it may not all be used for rent. I understand that. But I think the politics of that is not attractive. So I think we're better off making direct payments to landlords because everybody needs a house, a roof over their heads. And I'm going to conclude by citing an yet unpeer reviewed, but I think impressive study done by Emily Benifer at Wake Forest with a number of colleagues from Yale. And the point I want to make is that they found that where moratoriums were lifted, 10 weeks after they were lifted, the incidence of COVID increased 2.1 times. And 7 weeks after the lifting of moratorium, deaths from COVID lifted 5.4 times. This is an eviction, an end to an eviction moratorium, or if we start putting people on the street, this is a health emergency that we will create for ourselves. So I think we need to lean on our friends in DC and say, yes, let's get that money here. I think everyone's talked about the need to support the landlords. I agree. That money will support people and keep a roof over their heads. And I think we have established channels for distribution of this money that work, if not perfectly, pretty well. And there's no point in trying to invent something new because I didn't hear a lot of complaints about the last system.
Thanks so much, Adam. Now I'm going to ask Laurie Gibbs, from your perspective, what actions do you see as having the highest impact on the housing market in the Carolinas, both in the short term and in the long term?
Well, I'm losing my voice, so I'm going to do my best.
Wonderful. Thank you.
First of all, I'm happy to be here. I totally agree with Adam as far as making sure we have a rental rescue program that goes to landlords with notification of tenants, because some landlords are abusive. So I think there has to be a notification for tenants. I also think it's very important that we look at North Carolina as the two North Carolinas that it is. Eviction is eviction, but there are different challenges in rural versus urban when you start talking about this eviction crisis that we are dealing with. And when you look at the existing housing stock market, you say, yes, there's plenty of housing, but COVID has changed the way housing has become. When you look at cities like Charlotte and Raleigh and some of our bigger urban areas, a lot of the tall buildings, people who had the resources decided to move out of them and go out further in the suburbs so they could be less congested. I think when we think about our rural brothers and sisters, not only is the unemployment issue, and at first there were some that were not paying attention to the crisis of COVID because they thought they were spread out enough and it would not impact them. We're seeing that those numbers are starting to dribble. I think that the immediate future with North Carolina is, I think real estate prices will continue to increase, and with their price increasing and the attraction to certain urban markets, rents will just continue to escalate. I mean, I recently was in the market with one of my nephews just trying to buy a home, a first-time home buyer. Anything under $200,000 in a triangle, you're getting into a bidding war. It's like unbelievable. So the average person making $50,000 are being priced out, and you're not talking about homes that are in the best condition. When you look at some of the smaller landlords, I'm noticing some slapping a little paint on the door or something and justifying increasing the rent. I think our challenge in the near future is going to be, how do we maintain the existing rental housing stock we have, yet keep it affordable? Because the affordability issue continues to challenge us. Secondly, I think when we start talking about our rural markets, where there is need, and we still have not only the challenge of housing, but we're having the challenges of internet connectivity that we need to create, where there's capability of doing it, we can create what I call communal benefit to each other and bring back some of the old things that were able to work, such as, you may be a farmer, you may have cows, you may grow corn. How do we make sure that we also help people eat? Because we're forgetting the food insecurity that's impacting people while we're having this housing crisis and this pandemic. And then I also think that you have investors that are going to continue to look at real estate as an investment. As the stock market continues to move, and we don't know where it's going to move to, it's been fun. Zoom has done well, but we had a bubble before with the tech systems. I think housing is a way that we need to make sure we embrace all the different levels of income and trying to create a transitional pipeline of moving people to where they can afford and subsidizing landlords, yet making sure the tenant knows. I think I think whatever we do, it has to be of mutual benefit, because there will be some landlords who will get the payment and act like they didn't get it, and the next thing you know, the tenant is kicked out. My voice is not as well as I would like it to be, so I'm gonna leave it there for now.
Thank you, Laurie. You actually sound great on my end, so thank you so much. Richard, could you also talk about what you see as consequences to property owners and tenants if we don't take action, and where you would direct intervention given the options we've heard so far? You need to unmute, Richard.
You'd think I'd have the hang of this, doing 10 of these a day. But anyway, thank you. And thank you for the reminder. Yeah, this is really such a strange time. I think going back to what Adam said, that if nothing is done, it's very easy to see that 1 in 10 North Carolinians will be directly affected, and that effect won't just be to them. it will be to all of us to have the disruption that we've had in our economy over the last year, and the fact that it has not hit the banking industry, it has not hit huge parts of our society, is something that I'm still trying to figure out. We do business in all 100 counties of North Carolina, and we do business primarily where the rubber meets the road, smaller businesses. And we're seeing, with a couple of really isolated instances, and normally those are related to hospitality, whether it's a restaurant or a hotel, we're seeing almost no impact. Not from the residential market, not from strip center owners, not for small apartment building owners, of which we bank a lot of them. And I just don't see how that continues for another year without more stimulus. So what do we do about this? How do we do this? I agree with what so many of the folks this morning have said. We've got proven delivery systems, and I wouldn't get into much of a fight on how we deliver it. The banks could do it similar to another PPP program. There are state agencies that can do this, but this is the one thing that no one's talked about today that I think is really important here is there's actually been a huge upside to this last year. And who does the benefit of that upside belong to? And the upside is ridiculously low long-term interest rates, from which every single investor, every landlord, particularly the larger landlords who have access to the financial markets, they've all received the benefit of that. And who created that benefit? Well, all of us created that benefit because of the Fed policy, the fact that they have backed up and artificially tremendously dropped both short-term interest rates and long-term interest rates. And there is a tremendous benefit to society that has been gotten, but not to the folks who are at the lower income level earnings of our society. So here's what I think would be a very simple solution. And usually my solutions are too simple and therefore unworkable politically. That you say to the landlords, we're going to pay your debt. And you may even two-tier it to say to the really large landlords, we're going to pay your debt, but we're going to pay you 90 cents on the dollar of what the accumulated rent that you have, because all the rest of this, even though it may not be politically saleable, you can't get money, you can't get blood out of a rock. The money is not there. And so you say, I'm going to let you skip the collection cost. I'm going to give you the benefit of a lump sum payment, but I'm not going to pay you a dollar for a dollar because I'm saving you collection costs. But you also, every single pro forma of every single landlord of any size, not the mom and pops, but of any size, has been able to go back into their business plans and take their cost to capital from what they forecast 2 years ago to be 7, 8, 9, 10%. And now almost all of them with any size have either been able to go to their financial institution and renegotiate their debt down to under 3%. And I'm talking about 3% for 30 years or at least 20, or the really large sophisticated ones have been able to access the debt market and issue long-term debt for even lower. So you say, we'll pay for this going back, but we also want something else as part of that trade. Going forward, we want you to offer discount rent for the next year and a half that the individuals are responsible for, but you keep your tenants in, we're paying you for the past. We want you to offer discounts going forward for all of the same reasons that society paid for this cheaper cost of capital. And maybe that will get us on the other side of this and get people back on their feet. And as I said, this is not asking anybody to get something for nothing. Everyone paid into this. And they would have to be able to, they would have to say that they could not increase their rent. The landlords would have to say, we're going to keep this in place for 18 months, 2 years. The tenant pays, but it's discounted. And then going back to what Rick said, a while ago, utilities have to be included in this. And once again, every single utility provider in the state of North Carolina has been able to, in the country, has been able to go back in, reissue their debt or their cost of capital is significantly lower. Let them contribute to this very real crisis by having the same discount apply to them, maybe going backwards, but certainly going forward. And then trying to keep more affordable housing stock going in this state. There are a lot, that's almost a completely different issue. But part of that is we've got to completely re-examine all of our regulations. Our regulations are out of control. As someone who has just knocked down a building here in Raleigh and put almost the exact same thing back in its place, a 10% increase in needless regulation. My bank can afford it, but anybody out there trying to build affordable housing, it is completely out of control. Thank you.
Thank you so much to all of you. So we have a couple of members of the North Carolina congressional delegation attending today, and one of them asks, is the $25 billion in rental assistance that's on the table in the compromise bill enough to stabilize the market? And then reinforcing the question you've all touched on, what would be the best distribution method for these funds? We've heard a couple of options, the HFAs, the direct to the landlords, and maybe a couple of you can talk about this. And there's also some questions about which congressional members have already stated their support for that bill, where that stands, if any of you know that.
So this is Rick, and I don't want to handle I think Adam and Richard can talk better about the distribution side, but the answer is no, it's not enough, but it is a good start. And that's the pragmatic point we're at and the exigent point we're at. The $25 billion is in emergency rental assistance. It would be funded by the Coronavirus Relief Fund. It would be, I think, administered by Treasury, as I understand it. The funds would be for households below 80% area median income, with a preference for those at the 50% level. And I think part of the bill, as I also remember, extends the moratorium, the CDC moratorium, through January 31st. So I think it is an important start, and I think it is a place where we have bipartisan consensus, and it's what we've got to move with and worry about the next phase later.
Adam and Steve, do you want to weigh in on the distribution piece of the equation?
Well, I think I want to agree with Rick that this is a good start and a healthy start, but it will not ultimately be sufficient. So we'll have to re-examine that later. I would not, given the urgency of the problem, I would not try to reinvent the distribution channels. We've got distribution channels that are, at least in North Carolina, that are working well. I do agree, there have been a number of comments in the chat that tenants ought to be notified of payments, and that's absolutely correct. So the tenants have a deep interest in this. This is, of course, all of our money. I mean, this is tax dollars, so the money belongs to all of us. And it makes sense, but probably enough said, but I'd like to see this bill come out quickly. The distributions made immediately. We are on the verge of a cliff. So right now, we need money. We can come back and discuss this again, shortly. But right now, it's very important to get this aid out fast.
I would agree with Adam. I mean, time is of the essence, and I don't think trying to develop a new distribution channel is anything that anybody should be considering. It was said to me, a couple of weeks ago, what about HUD? And HUD could do that. Listen, I've worked with HUD and I love HUD. No, they can't move that quick. If it's an existing channel though within HUD, fine, but they're not going to stand the program up. It went through the SBA. They actually did a pretty effective job of getting it up, even though they struggled. One would have questioned whether they could, but they did. It was really the banks. So North Carolina has many good channels that are working. Why not just stay within those? And over time, we can look at other distribution channels, but not right now. As Adam says, we can't be thinking about this in 60, 90 days from now. the problem will have exacerbated itself, by then. This is the next 30 days. We have to be in and moving forward.
That is the one thing that I hope everyone can agree on. I don't know how anyone takes the other side of the argument, but this is going to be a whole lot more efficient and cheaper to fix before it happens than trying to clean up what might very well be the second Great Depression if we don't do anything.
Thank you for that point. Steve, there's a lot of curiosity about your proposal, so I'm going to raise two questions that people have put forward. One is, with a loan program to landlords, who do you imagine would administer the program? And how would you guarantee that landlords put that money towards rent and not towards other things?
Well, there's a patent pending on my methodology there. No, only kidding. I really think you need to look at the lender. I mean, we're talking about the lender, they already have a direct established communication line. They're already collecting mortgage payments. And I think to Richard's point, this is not dollar for dollar. You can't even qualify unless you've had more than, I would say 20% of your rent roll impacted by a non-paying tenant. And by the way, that takes off a big swath of people that might think that the money's eligible for them. It's got to be 20%. If you look at typical multifamily properties, you look at typical debt service coverage ratios of anywhere from 115 to 150. There is somewhere around 15 or 20% of cash flow that's available. So you've got to have an impacted rent roll of at least 20% before you can't pay your obligations. And so I think the landlord has got to feel that first. The bank, who's already collecting financial statements, already has a monthly rapport with the borrower, is really the best one to do it. And it's something that gets tacked on to the loan servicing. Much easier administrated that way. Don't introduce a new program, a new agency, or anybody else to monitor that. And what we find is that most properties, I can't speak specifically in the case of North Carolina, how many of these small multifamily properties actually have debt, but it's a large percentage. And I think that'd probably be the most efficient.
Thank you. So we also have a question, and maybe Rick, you can kick us off on this. How do the panelists feel about HB 1200 from last session of the General Assembly here, which addressed rent and utilities?
Well, obviously there was a very concerted effort to try by almost all interest groups involved on landlord side, on tenant side, to try to move House Bill 1200, and it came close, but it didn't. I think for state purposes, it is again sort of, you start at the starting place, and it creates a real capacity. But nonetheless, I think others can probably speak to it better about its possibilities. There was a lot of effort that was put into creating that bill and trying to create compromises to get it moved. It came close, and so I think it has got to be sort of the starting vehicle for us to be looking at in the legislative session. I would add to it, it is the exigency we're talking about can't wait for the legislature to get into gear in February or March. I mean, there really is a need to be moving now, and there's money to move. I highlight again, there's $4.4 billion in the reserve that wasn't tapped because it wasn't used last year, and $1.1 billion in the rainy day reserve. So what House Bill 1200 asked for was a very small portion of that. That would be the starting place for, I think, for the legislature as soon as they come back in January.
Would anybody else like to weigh in on that?
I think Rick hit it perfectly.
Great. So we've talked a great deal about targeted assistance directed at the landlords. What about how to target assistance well towards tenants to make sure that payments are used and proportionally used towards delinquent rent and their needs? Any thoughts on that piece?
Well, if supposedly what's been in place for the last few months has been forbearance, if you will. And so, and I realize that it's not a perfect world and this wouldn't apply to everyone. But if you've got a group of tenants out there that hopefully have been saving something for what they believe to be an accumulated rent payment, and all of a sudden you completely wipe that out going backwards and you offer them some sort of discount going forward, that's tremendous targeted direct relief.
Great, thank you. Is there any, I'll give you all the last word. Is there anything that we haven't covered that you want to make sure is mentioned, or comments you have on some of the proposals that have been put forward?
Debbie, the one thing I want to say is that we have a great cross section of people on this call, and thank you for organizing it. It's not certain that $25 billion package will pass. But I think everybody on this call, while we might not agree about every specific item, does agree that it would be very dangerous for North Carolina to proceed without relief on this issue. So the only thing I would say is that I urge everybody to use whatever contacts they have and to communicate as broadly as possible about the need here, and to get in touch with our representatives and have your friends get in touch with our representatives. They need to hear from us about this crisis and understand it at the depth that it's been exposed through the really good presentations today. So this rests on us to tell our leadership in Congress and the Senate what we need here at home.
And I would just echo that, Adam, anybody, you don't have to be a sophisticated economist, but this has been such a strange year in so many ways that there is a large majority of the population that, other than loss of freedom, they have not been touched at all by this. They certainly have not been touched by this economically. In fact, many ways, because of the stock market and other things, people have done better. That will not be the case if 1 in 10 North Carolinians are in fact evicted over the next few months. This will not be contained to certain zip codes and certain areas. And if that's what it takes to get people to the table for them to understand, and I can tell you from a banking standpoint, our non-performing loans continue to be at all-time lows, and how that impacts everybody's availability of credit is important. But if those start spiking and start elevating, this thing will roll out of control and be on everyone's doorstep. So even if you don't want to do the right thing by looking after your neighbor and you just want to look after yourself, this has got to get some attention.
I would just add on Richard's comments. Our book is, we've got North Carolina, we've got the whole United States, and the reality is our delinquency for over $200 billion worth of loans is very low. And there have been a lot of forbearances that are given, so it's not counted as a delinquency right now. But we have been saying now over the last 6 months that we don't see this really kicking in until the beginning of the second quarter, end of the first quarter. And that all coincides with everything that's going on here. And so what we've been talking about are tenants and multifamily properties, but what about those employers, the hospitality industry, the restaurants that have gone out? A third of the restaurants have gone out of business. And we didn't see it. We saw it in big metropolitan cities in the United States first. Now we're seeing it in middle America, and it's working its way around. And the unfortunate thing will be, we will not realize how bad it is until it's too bad. And that is the hardest thing, to convince people to take the medicine before they're sick.
The other point here is that it's a short, listen, what do we really need to do? We need to bridge North Carolina between now and the wide distribution of the vaccine. The vaccine is here. We have a cure. We need time to get it spread, and distributed to everybody. We need a short-term, medium-term correction here. We would be really foolish not to provide this bridge, because it will, as we've heard from that study, it will increase the incidence of COVID in our population, increase deaths if we do go through with it, with evictions. As Richard points out, it'll impact our local lenders and credit in general. And none of us can escape this. So we need to hold hands here and walk together.
I want to add to the comments. I agree with everything that Adam and Richard and Steve have said, but I also want us to remind, another reminder, that if we don't do this, aside from the moral and health issues that we're facing, it will absolutely stagger and potentially collapse local governmental systems under the weight, whether that's social service agencies, mental health agencies, homeless shelters, food banks, educational deficits. I mean, it would be enormously destructive, and it will take a generation to overcome that staggering burden. And, and this is the bridge to avoid that.
Well, thank you all so much. I want to thank all of our panelists for participating in this really important discussion today, and you've really framed very well why it's so important. At the North Carolina Leadership Forum, our goal is to encourage leaders to facilitate deliberative discussions across sectors and perspectives to address critical issues in our state. And your commitment to a thorough discussion of how to address this important need is greatly appreciated. And we look forward to further conversation. Here, I'm going to hand it over to Joe, who's going to talk for a minute about what we hope might be some next steps and to wrap us up.
Well, thank you all. Wow. Thank you all very much. This concludes our proceedings for the day. On behalf of the organizers of the working group, I'd like to thank the participants for their astonishing contributions, wonderful contributions. Thanks also to Duke University, to our dear friend Isabella Fox, and to Kristen Treble, I hope I get that right, for their technical support. Thanks to all of you online who've attended and participated for your questions. I hope we've answered most of them, and I'm sure we'll hear from you if we haven't. I hope we'll hear from you if we haven't. My colleagues and I hope, Debbie and I and Leslie hope, and Lee hope that you have, this meeting has informed you about this important issue and will assist you in the development of effective responses to it. So get holding hands, according to Adam. I'll hold hands with you, Adam. This working group is ad hoc. The organizers hope and intend that this meeting is the first of several we'll have that will lead to bipartisan proposals that will lead to deal with the distress of tenants, landlords, and communities. In that regard, comments and suggestions about our program today and about where you think we should go from here would be welcome. That is to say, to all of you who are out there in video land. Please submit them to your servant at joseph.a.smith@duke.edu. That is joseph.a.smith@duke.edu. Thank you again to everyone. I know I'm informed, and I'm sure all of you are. The meeting is adjourned. Goodbye.